Is the crypto market a worthy investment or just the next bubble ready to burst? One of the single most confusing types of currency to be found in the modern world is that of cryptocurrency. In fact, it's a little like the stock market in that front. If you know about it, you can make some truly life-changing investments. But the learning curve to figuring it out can be a little on the steep side. And on the topic of figuring it out, a lot of people have recently started asking, is it worth our time? Should you really put forth the time and effort of learning how to invest in the crypto market, or is it just another bubble on the verge of bursting? Your fellow market monkey is here to help you finding an answer to that question. Let's start with the basics. What is cryptocurrency? It's a type of currency only available in a digital space. Cryptocurrency was first introduced in 2009. And it has been a source of constant debate since then. Some people don't think it's a viable form of currency. Some people think it's going to be the next great thing. And there are even more people who just don't understand what a cryptocurrency even is. Before we get started on the intricacies of the crypto market, let's take a moment and go over some of the starting points. If you're just getting into the crypto world, these quick explanations might be enough to clear up the questions you're no doubt facing. There are three terms important to understanding cryptocurrency: wallets, miners, and exchanges. As you might be able to guess, wallets are the digital software that allows you to hold cryptocurrency and take part in exchanges. It's a form of programming that exists entirely inside your electronic device. Exchanges involve either buying, selling, or trading cryptocurrency. This is pretty much the same as the exchanges that you've heard about when people discuss the stock market. It's not a physical item that's being passed around, but a virtual currency that can bring you real-world income. And in the simplest terms, miners are both the people who locate the cryptocurrency and keep it available for others to locate. Mining is the process of creating new Bitcoin by solving a computational puzzle. Mining is necessary to maintain the ledger of transactions upon which Bitcoin is based. You might be familiar with the term Bitcoin. That's because it was the very first cryptocurrency introduced, and later became the model for every other type of cryptocurrency. It was created in 2009. By April of 2011, a Bitcoin was worth a single US dollar. By 2017, a single Bitcoin was worth more than $20,000. And as of writing, in May 2021, a single Bitcoin is worth almost $60,000. Other top cryptocurrencies include Ethereum, Ripple, Cardano, Litecoin, NEM, Stellar, and EOS. Just like the recent fuss with the GameStop stock exchange, these cryptocurrencies have the capacity to drop in worth, stay in a steady number, or gain in worth. Sometimes, a single monetary amount in the above cryptocurrencies can be worth thousands of dollars in US currency. Other times, the market can plunge, as it did with GameStop in February of this year, and the currency becomes worth less than a single dollar. But that still leaves the question, is it worth investing in a form of market that's entirely virtual? In theory, the answer is both yes and no. This is because just like the stock market, there's a certain level of risk involved. You need to buy when the prices are low and sell when the prices are high. In fact, you could almost consider the crypto market to be a form of virtual stock market. That might help you better picture both the pros and the cons of investing. Remember, even with the stock market, there's no physical item being exchanged. Stocks and cryptocurrencies are both virtual items on a base level. There's no difference in risk when it comes to investing in one or the other. If you consider stocks to be worth the time to learn about and follow, then you'll be able to find the same worth in keeping track of the cryptocurrency market. One of the biggest risk factors is being out of the loop. You need to stay on top of the market, understand which cryptocurrency is most popular and which one is crashing, and all the other information required to make an informed decision. One of the most popular ways to stay updated and involved is through newsletters that condense all of the top need-to-know news down into a simple and short read. And as you should know by now, the Market Monkey is all about being simple and to the point. Some of the most popular newsletters focusing on cryptocurrencies are Off the Chain, The Wolf Den, Bankless, and Wealth Mastery. All of these newsletters help gather and condense the information and up-to-date news for the crypto market, letting you skip out on the time-consuming research while keeping you up-to-date about the latest news in the main cryptocurrency markets. So that covers the basics, and a good way to stay involved with cryptocurrencies. But there's still one question left that is asked countless times. Is it worth joining, or is this just going to be the next bubble to burst? A bubble is an economic cycle that is characterized by the rapid escalation of market value, particularly in the price of assets. For example, .com was a bubble, when it first came out in the 1990s. Due to the hype, people started investing large amounts of money into websites that never got off the ground, went anywhere, or accomplished anything. And after the crash stage, the previously overpriced .com websites were worth next to nothing. These were bad investments, but of course, that doesn't mean the purchasing, investing, and sale of websites is a complete waste. Look at Amazon, Google, and even Yahoo or Bing. The catch and the risk when it comes to investing is trying to locate the diamond among all of the false glass, the unicorn in the horse herd, the gold in the coal. There are countless phrases to represent it. You need to look at the various cryptocurrencies and figure out which one is worth investing in at the moment. The people who invested in Amazon at the very beginning made out incredibly well, just like the people who originally invested in Apple, HP, and other top items. This can be tricky, especially when you're first starting out. Sometimes bad investments are going to happen, no matter how careful you are with your cryptocurrency. Often you'll be able to recover from the flub and make up for it later on. With every investment, there's a risk that it's going to fail, especially in a fast-moving world like the crypto market, where new developments and new cryptocurrencies appear to be popping up almost daily. For cryptocurrencies, they've already had a crash where the value of cryptocurrencies dropped down to next to nothing, and then the prices skyrocketed afterwards. There's a chance that they might crash again in the future, but there's also a chance that you might be able to invest in the right type of cryptocurrency and come out of the situation with enough money you'll never have to worry about anything again. The crypto market is a form of virtual stock market, in the simplest terms at least. The two can be compared both in product and in function. In short, there's every chance that you might make a bad investment, but if you're able to spend 8 minutes a day checking out a cryptocurrency-based newsletter, or even several newsletters, and then take the time to look into the various cryptocurrencies and their current worth, there's an even larger chance that you'll make a good investment and come out of the game on top. As always, due diligence is king. I'm the Market Monkey, and if you found this video useful, please hit that like button and consider subscribing and turning the notifications on. This video does not constitute as financial nor trading advice, and to be frank, you'd be crazy to follow the directions of some random gorilla on the internet.